We are here, we are here, we are here. On this amazing day, everyone. This is Cam Jones, FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back up to business. Okay, everyone, we are looking at GBP CHF. We're going to grab our red marker. Let's draw it up to see what's going on in the market. So back in May of 1993, the market started off with a push down. From there, the market pushed down into a major area of support. I will see a formation, and that's a double bottom. First leg, second leg, third leg, fourth leg. It's the formation of the W. Once we see a W, what happens at the W is a retest, and it happened here. From there, most of the time, you get a push up, and price pushed up back to previous areas of high highs. From there, the market retested the support, shot up higher. We see about 2 wicks to the top, showing that it lost momentum. Went back down to the support, went right back up to previous areas high highs, and we see more wicks. So it's getting wicky in this area. So when we start seeing them wicks, that means the market may not break. There's a chance that it can. There's a chance that it can. There's a chance that it can't. Sometimes when it does, it doesn't hold for too long and eventually end up dropping. And we see that here. It broke through the support once again, created enough momentum to break through the support, retest the support, build momentum again to push up. We got about 3 wicks to the top. Market losing momentum. Got the push down. It's trying to come back up, retest previous area highs, not once but twice. Market's just going down for another push down, went right back to high highs to the support. From there, it broke the support to go back to the support, and it's just in and out of it. And with me doing this, we just ran into another pattern. The formation of double bottom. First leg, second leg, third leg, fourth leg. The retest either happened like it's happened here, or was it here? It looked like more here because it's consolidated. So the consolidated, the breakout and the retest happened here because retest the previous areas. Then we had that break through the support, and then we got 3 wicks to the top, showing that market wasn't going to break, and we got to push down to the bottom again. And once it pushed down, the market pushed down very far. It was very bearish in the market. So you see 1 push, 2 push, 3 pushes down to the bottom. Is at a major area. Is at a major area of lower lows. And now we're going to see what the market is doing and where's it at. So this is a major area of support. So we can see that price is not breaking it. It's kind of just breaking up, coming back down to support, creating high highs, coming back down to support, creating high highs, coming back down to support. So it's not breaking. It's kind of just slightly consolidating now in this area here. But before that, it was at high highs. So right now, price is at areas of lower lows, and it's trying to break. We can try to see if we can identify some type of pattern in there. Right now, we're going to erase our red markups, and we're going to go down the price action to check out our overall trend line and the trend direction the market is in. First thing we're going to work on is now we got to find this trend line. The way we're going to find the trend line is we already did the market structure. The market structure identified we are at lowest low, and when we are at lowest low, the market may try to turn around and go high highs, and we can see that in this formation here. So a formation happened. So remember, we're in that support, major support. So we thinking that market is going to go up, and this is where it shows me the market is going to go up at. We have a double bottom formation. First leg, second leg, third leg. Like I said, when you get that third leg, you're going to get that push up to the top. Excuse me. Let me recorrect that. Big mistake, big mistake. Formation, first leg, second leg, third leg. It consolidated a little bit, and then the fourth leg went up. After the fourth leg went up, the retest should be happening somewhere in this area. So it should be coming soon. So once we get that retest, then the market most likely going to push up to the next level, which would be here. And then if it push up higher, the next level will be here. And if it push up again, the next one will be here. And so on. So we have lower lows, and the market is in a uptrend. So far, that's what it looked like on this time frame. We're going to create our trend line. Now we're going to look for SRs. SR line, support and resistance. The way we're going to do that is we're going to find price action, which is the last candle. Sometimes it's active, sometimes it's not, depending on the weekdays or weekends, and depending on what market are you trading at the same time. The Forex market is 7 days a week, depending on how you're trading it. So we got the push up, looking for price action. We're going to look over to the left to see what price is trying to break. So it's trying to break this peak right here. From there, if it broke to the next, if it went up to the next level after this peak, after it breaks the peak, it's going to go up to the next level, which would be this peak here. So we already got two. We got one level. We have the area of price action trying to break. We have the next level is going to go up to, and now we have to find an area. If it goes back down, how far it would go down. And this is where we target this inverted peak in this area right here. Okay. Actually, there's another one hidden, so maybe that's not the spot. It's actually right here. So this is how far the market can drop. So if it breaks this, then the next level will be here. But this is definitely a hidden level that I just found in SR lines. So if we go down the time frame and we work with the top down analysis to create our SR lines inside of our red lines. So with the top down analysis, we are looking for peaks. The more we practice the SR lines on the time frames, the easier it gets. Well, the easier it becomes. So there's a peak here. There's a peak there. There's something going on here. There's a peak here. There's an inverted peak here. And there's probably something going on in here, but I'm not 100% sure. I may have to go to the time frame. It's like something probably going on in here, but definitely probably right here. Yeah, something's going on here. Let's see. That looks a lot better, a lot clearer. So after we create our SR lines, we're going to go down the time frame or stay on the time frame and look for patterns to figure out what is market's doing. So where we at right now, we did identify the double bottom formation on the monthly time frame, and we're going to take a look at what we see with GCHF on this time frame. So we already know that the W happened here with that first leg, that second leg, third leg, and that push up. Okay. So we know we identified this on the earlier time frame. So now we're on this time frame, and this is the W. We got the push up. We don't see any retests here. Nothing happened after this breakout. So it basically, when it did the W on the higher time frame, it basically consolidated. So it looks like a double bottom on a higher time frame, but when you go down to lower time frame, we see 1, 2, 3, 4, 5 touches. As multiple touches to the bottom, wasn't able to break out, so the market pushed up. But it was consolidating, so once we had that breakout, we see the push up. And once you have that push up, it should be a retest. It should be happening somewhere in this area. Once the retest happens, it's going to push up to new levels of higher highs. But for right now, we just got to wait to see what's going on and try to figure out a pattern. So the way we're going to identify a pattern is we're going to take a look at where we at right now. So if you look at last price action candle, it's real small. It's like a very, very small green one. And then from there, the candle percentage is a little bigger, and it's bigger, and it's small, and it's small. But I'm paying attention to the last three. The last three show me losing momentum. We went from, let's say, a 75% size candle to a 50% size candle to if that's a candle right there, I'm really, here's a little tiny candle. It went like 10%. So it's losing momentum drastically. You know what I'm saying? Don't get me wrong. It could be a push-up later on, but right now, it just showing me that it's losing momentum. Okay, so you got to remember that. Let's go to that time frame, take another look at it, see if we identify what's going on in the market. So I do see a pattern. I do not know the name of this pattern, but I can tell you this. When I do see this pattern, most of the time it's a push-up. So with this pattern, I don't even know what this is called. I got to look this up. It's the push-up. it looks like an ear, and then you have the head. And then once you have that head, it retests here and you get that push up again. And then sometimes it drops. And look what it just formed. It actually formed a double bottom, look like first leg, second leg, third leg, fourth leg. And then we'll have a retest somewhere and it pushes up higher. But sometimes it don't do that. It may drop down. But we do know that the market is at higher highs and is losing momentum with these last few candles. And to confirm that these candles are losing momentum, if you check out the last 5, 1, 2, 3, 4, 5, 6, 7, the last 7 can't break this red line. Everything is just, all the wicks is just touching it, either the same spot or close to the same spot. And if you level up with the last candle, nothing's broken. No bodies or wicks broke that last candle space, so nothing going higher. So this definitely shows that it's losing momentum. So we're looking for some type of pattern. Like I said, I've seen this pattern before. I know it's most likely it's going to be a push-up, but sometimes it drop, but I don't know the name of it. If you guys go to Forex pattern, go to Google, type in Forex pattern cheat sheets, click on images, and view all the images of the patterns. You don't have to remember the names, just remember what you see. It's very important. That's a major factor in taking these trades and finding out the overall, not just the overall, I shouldn't say the overall direction, more like it helps out with, feeling comfortable with taking entry in the direction the market is going to go into. So you have an idea when to get in, when to get out, etc. So with this trade right here, like I said, I'm used to seeing this push up because it's like an ear and a head. It may not be a push up, but what we're going to do is this. If, let's say, we identify the pattern, and the pattern's a engulfing pattern, and when we see engulfing, most likely it's going to be a push-up. If we see that engulfing here and it happens, let's say if we took that trade, so if we take that trade to the next level, that will give us a total estimate about 103 pips on the way up, which is an amazing move. 103 pips on the way up. If the market goes back, hits our low, it would be about an estimate of 50 pips. Probably could tighten up a little less, but I'm comfortable with 50, and that's a great trade right there. So once we take this trade, if we do say engulfing pattern and it breaks this layer of the high highs, that means the market is going up. And all we have to do, we can grab one of these shades. So we do know our pips. But all you have to do is grab one of these shades, color it, place it right here, and then it becomes a waiting game. So whatever's going to happen here in this time frame is going to happen. So if you just wait, it's going to reveal itself. So for example, I told you guys I've seen the push up, I've seen the push back down, I've seen another push up, and then I've seen the market may push down a little bit, then which is the retest, and it pushes back up. At the end of the day, it still formed the double bottom, which I didn't notice until I did it. Even if you don't know what it is, if you just keep it in this rectangle and you just wait for the pattern to do what it do, you would see the trade. It could be a double bottom, it could be a double top, it could be any type of pattern in the market, but the pattern is going to identify here. So as long as you're looking at Google and looking at Forex pattern cheat sheets with the images, you're going to reveal itself. And once it reveals itself, it could be a double bottom, it could be a double top, it could be an engulfing, and then you take the trade. And that look like an estimate of 100 pips, 103 to be exact, which is an amazing move for GCHF. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention.